stock market today analysis for October 4th, 2022. Nasdaq up 3.34%. S&P 500 up 3.06%. 10-year U.S. Treasury down 1.4 basis points. Gold up 1.88%. Bitcoin up 3.26%. Oil up 3.10%. Risk indicator closing out at closing out at 247.6, still in the high risk area in that mid range. We see this starting at August 29th and in this high range still, but it's definitely been coming down. And why is that? Because this risk indicator is analyzing risk in the stock market, right? It takes the Dixie, which is comparing the US dollar to other currencies, and multiplying it by the 10-year Treasury, and for whatever reason dividing it by 1.61. And so when the US Treasury is going down, then that's bringing down risk in the market. And I think in essence, because if the yields on the treasuries are becoming less attractive, then money will flow into equities. What type of money? Is it mom and pop? Is it you and me? No, it's big players, central banks, governments, hedge funds, who knows, but big amounts of money be flowing in and out of flowing potentially out of treasuries into equities if they feel like they're going to get a safer return. Speaking of big money flowing, this chart right here, the Pro 2, you notice this one over here, the Pro 1, lots of red and green candles here. This one, you got lots of red candles, lots of green candles. It's the same stock, S&P 500, same time frame, 3 months. Why is this totally red? Because this is looking at big amounts of money flowing in or flowing out. It has, like, let's say, an elevated switch. In order for it to turn a color, it needs a significant amount of money flowing out or flowing in. So with the S&P 500 here, money has been flowing out. That weekly stochastic still going down. Although on our daily chart, we see we've had this pop to the upside. Prices traded all the way down here, opened here, traded as low as here. Buying pressure brought it up here. And this is a good bullish sign. Okay, here was our volume yesterday. We got an elevated amount of volume today. Our weekly stochastic might get a little run to the upside. Technology sector via XLK. Same thing, money's been flowing out. Got a good trend to the downside. Had a big gap up over here. Second day, right here was our first day. Second day, volume sort of the same as yesterday, and below its average. Healthcare. Money's been flowing out. That stochastic started moving down. Big pop to the upside. This looks like a stronger day of volume, right? It was kind of a low amount of buying volume here. Second day came in with a big amount of buying volume. Consumer discretionary, same story over here, right? Money's been flowing out, downward stochastic. Increased amount of volume on the second day in the rally. However, you notice not as strong of a candle here. Opened here, traded all the way up here, but had to close here. So really couldn't even touch that resistance level, and sellers pushed that price down here. They're just really stuck in this consolidated range. right in there. Real estate, same thing on the Pro 2, money flowing out, downward trend. Volume kind of pulled back a little bit. We got that same looking candle. This one looking even worse. Look kind of doji looking here, where prices, even though they closed higher than they opened, wasn't really by much, and selling pressure just pushed it down. Financials, similar story on the Pro 2. Second day of volume increased on this bullishness. So what we want to see is, as tomorrow, what's the volume going to be like? If we get a third day of increasing volume for these different stocks, that is going to be it's a good indicator that we could see a longer run to the upside. Now with our XLF in the financials, now we're hitting this 25-day moving average. We got the 50-day moving average right here, so that could put some pressure to the downside. Ultimately, once we get above, if we get above those two, here's this area of resistance is going to be right in here around this 34. And then of course we got the 200-day moving average. So definitely have some work ahead of it in that sector. Similar story over here. We had an increasing, we got the same look over here on our long-term trend. On our shorter term trend, we got the second day of increasing volume. We got a big gap up, but now we're running into this resistance right in through here and running into these moving averages for the Qs. Downward trend over here, increased in the volume for today, but still not hitting its daily average. So that is potentially looking weak and under all these moving averages, and you know, kind of stuck here in this range. UUP, the dollar, money's still been flowing in. Stochastic starting to move sideways, and the shorter term trend though, it's been moving down with a big, look at that, big increase in selling pressure, significantly over its daily average of volume. We'll have to see what's going to happen throughout the rest of the week, because now we're getting into this range. If it's going to start, we already closed below the 25-day moving average. If it's really going to start breaking down, maybe hit this, we'll have to see what's going to happen around this 29.50 range and then thereafter. What happened with oil? Oil, we're stuck in under this now. Now we managed to really get above this $82 range, but now we got a lot. Look at all this resistance right in there. This is really just like, basically for last 3 months, it has kind of gone sideways, right? Here it was. You can see, look, boom. Okay, it's a little, yeah, or you could say sort of sideways. You know, it's really been trading in this range. We'll see what's going to continue to happen with that. Gold. Gold had, over the last couple days, had a shot to the upside. Now it's hitting this 50-day moving average and kind of consolidating there. You can see it's similar thing, right? Here it's this range that it's in. It's stuck in this area, and it's stuck there right now. And Bitcoin. Let's zoom in, because speaking of sideways, that is some sideways action in there. Zoom in at 1 month. So we are above that 20,000 range, but is it going to stay? I mean, this looks weak, but it might weakly stay above it's above the 20-day moving average right now. Is it? It's like flirting on that 20-day moving average. We'll have to see. Like, it could start could start building some weak support in there, and maybe start moving to the upside, but nothing looking super promising with it going up at the moment. Overall, what are we looking at? Here's the S&P 500 line chart. We see that here we are today. We've been in this downward trend, right? And we see in the past, here's a bit of this trend line to the top, trend line to the bottom, and we're kind of in the middle there. Potentially it could rally back up here, and if it's going to continue to the upside, it's got to break this line right here, that 427. But before it breaks the 427, it's really got to get above this 390-ish range. So we want to see what's going to happen with what I'm seeing, like technology. All right, that's a weak amount of volume. It's still below these moving averages. We'll probably have to see some volume pick up. We have to see what it's going to do in this 129 range. We see healthcare. It's got a second day of good volume. See what the follow through is going to be tomorrow, but that's looking positive. Technology, looking kind of weak. Healthcare looking good. Consumer discretionary, 2 days in a row with a second day of increasing volume. Let's see how the third day is. However, this candle, right, that's starting to show some weakness by pulling back. See how tomorrow plays out. Real estate, it has a minor impact on the S&P 500. You can watch some of those past videos on these chart review videos while this is here, but it's definitely looking weak. Financials, okay, showing increase in the volume today. See how tomorrow does. That's a good, strong looking candle. So, like, me personally, I'm still sticking with the same thing, unless some quantitative easing restarts, which it could, but as far as I know, it hasn't yet. Like, overall, this is a strong trend to the downside. But if we look in the past, right, we go back here. This is that is not working out well for me. If we were to go back as far as this goes, back here to whatever 1993, we see that even though these bear markets, they can last for, this one lasts a couple years here, about 2000 down to 2003, whatever, 2004, right? But then they reverse. So it could be the end, could be beginning of the end, or not. You know, we really got to see it break out of this channel. We got to see it break here, and it is going to take, it's going to take a heck of a lot to get like back up to these all-time new highs. Like, it's got a ways to go. So I'm not holding my breath for sure. I'm definitely not holding my breath, and I'm just waiting to see if it's even going to, you know, kind of touch the top of this channel. We'll see. In the meantime, what you can be doing, if you want to test some things, you could be doing some paper trading. Webull has now started, if they weren't in the past, I know for a fact now that they are, you can paper trade options, so that's great. I should have a link somewhere to my Webull account, but I don't. So get it if you want it. I personally, myself, I like using Thinkorswim, TD Ameritrade. And lastly, go to IamSuccess.com, download some stuff, and we'll become friends that way. You guys, this is a bit of a different type of video because your good buddy Brent going to hit the gym. You guys have a fantastic day. Bye-bye.